Hey everyone, happy Thursday, March 19th. It's a little after 10:30 a.m. on the West Coast, and it's time for another market update. Another week and another week driven by the war with Iran. It actually escalated yesterday. Things had not necessarily started to come down, but the market started recovering a little bit after a lot of worry about oil and inflation and so forth. But yesterday there was an escalation. It sounds like there was an Israeli strike on a natural gas field in Iran, and Iran responded by hitting natural gas fields in Qatar, which is a huge, refinery. I think that provides a lot of that natural gas. So today, oil or crude oil cost per barrel went over $110. Inflation concerns. Not good for rates. Like we talked about, any sort of volatility like this, especially things that affect the supply chain for the world and energy costs and things like that, are not going to have a good effect on any of the markets, whether it's unless you're trading oil, I guess, but not mortgage rates, not the stock market. Crypto has really been bad in a bad spot as well the last month or so. So not good things. Let's hope for some sort of resolution, not just for the moral and humanity reasons, but also for to get some the markets to settle down. So not good. Got to keep an eye on there. And like I said, things seem to be escalating over the last 24 hours. So not a good thing. Next thing. So yesterday, the Fed ended their most recent meeting, and as expected, they did not do anything to the rate. They did not cut it. They did not raise it, as everybody knew kind of coming into it. So in that situation, like we've talked about before, it always comes down to the statement they release and the press conference afterwards with Chairman Jerome Powell. So the statement, there wasn't a lot of change to the statement. However, there was a line about the war in the Middle East and what that's going to do. And then their projections that they release kind of think where the inflation's going to go upcoming, whether or not they're going to cut rates upcoming, things like that from all the members. Those weren't really in our favor. They show inflation higher now than they showed previously at their last meeting, and they also show less cuts coming up in 2026, which again, not good for us. So that was the main fallout. And in the press conference, he had more of a hawkish tone. He didn't really address the fact that the February jobs report was so weak, or the January jobs report in February that we got, concentrated more on inflation worries and things like that. And the other thing that came out of this, I think that was concerning to the markets, is he talked about he would stay in power or as the chair temporarily until a new chair was confirmed by Congress. Right now, there is an issue with that candidate, Warsh, that President Trump has put forth. Senator Tom Tillis, who's a Republican, is blocking that confirmation about this investigation in Jerome Powell that the DOJ is doing. So right now, it's kind of a standoff between the Republican senator and Jerome Powell and the administration, the DOJ, where basically the senator is saying we can't have the president selecting and pressuring our Fed chairs. The markets need to be independent, which the markets generally would agree with. Whereas the DOJ is saying they're going to keep going after Jerome Powell. So basically, until the senator is saying he will not confirm the new candidate until that investigation goes away. So which will happen first? Will that investigation be ended by the DOJ, or will the senator back down and allow the confirmation? Until that happens, Jerome Powell is saying he will stay on as chair even after his term ends in May. So the markets were kind of looking forward to Chairman Powell being gone because they think the new candidate, rightfully so, will probably be more, sensitive to higher rates and want to cut rates. However, with all this going on and the turmoil, and including what's going on with the war with Iran, that is in doubt. So lots of volatility out there, lots of unknowns, which the markets, like we talked about, do not like. Next thing, producer inflation spiked in January. This was a big concern. This came out a lot higher than expected. It was supposed to be about 2.4 and came in at 2.7. And since CPI, the consumer side of this was lower, what that might be showing is there's some hidden inflation that hasn't been passed on to you or I as consumers yet, and it's just on the producer side. But producers tend to pass those costs along to us as the consumer. So that means we might see an uptick in consumer prices, and that was before any of this war stuff. So not good there. And again, something that the markets were not happy to see and had a negative effect on us. Next thing, let's get some home sales stuff. So the first one, we're going to look at new home sales we got for January. January, it came out today, and you might see this on the news, down almost 18%. Not a good thing. The mainstream media is making a big deal out of it. We never see swings this big, but just a couple months ago, I think October to November, it went up by 18%. So we do see swings like this, but still not a good thing. Some weather concerns would have had an issue there. In parts of the country, the weather was really bad. In winter, people aren't, going out to see new builds as much. But rates had also started to come down, so that's not necessarily a positive with rates coming down that they drop by this much. However, most new home builders are also corporations. A lot of times they stock up, or they front load some of these home sales, push them through at the end of the year, so their Q4 earnings look really good. So that might have happened. They might have drawn some of that demand into the fourth quarter instead of this first quarter. But overall, not a good thing for it to be down 18%. So we got to have to keep an eye on that. Obviously, rates would be helpful, and also obviously, and then a war with Iran would also be helpful. So next one we got was pending home sales. So this was actually for February, so a month forward. This actually was a more positive. It was supposed to come in about a negative 0.6 month over month, came in at plus 1.8%. Still down year over year, almost a percent at 0.8%. And again, this all has to do with rates being higher, things like that. So still lower than we'd like. Nice to see a positive number, but until we get some nice positive movement and consistent movement and stay down below 6 or close to 6, we're probably going to see home sales lag, because a lot of people are waiting for rates to drop before they jump back in the market, and a lot of people that are home sellers will not list their home until they think they can get a good rate to buy a new home. So it's all all affects each other, but right now, with everything going on in the world, doesn't look like there's going to be a lot of positive movement down anytime soon. So where does that leave us? So the average 30-year conventional today is at 6.43%. Last week it was at 6.41. A couple days ago we had dropped back down to 6.29. But like I said, the last couple of days have hit us pretty hard with the escalation in the war, that the producer inflation spiking, things like that. So getting closer to 6.5, where just a few weeks ago, before this all started, we had ticked below 6, and that was such a positive day. And it looks like momentum's again pushing us down and rates lower, and then something in the world seems to happen every time to prevent that, whether it's a jobs report or now this horrible war with Iran. So not a good thing there. We all want rates to come down, but again, until things settle down, we're probably going to see a lot of volatility, which generally means rates higher. So what's coming up? So we got important dates coming up. April 3rd, we're going to get the next BLS jobs report. That will be important to see if that negative job creation continues. That would be something in our favor. Again, don't want to see people lose their jobs, but with inflation going higher and all this going on, really our only chance, besides inflation coming down, the war ending very soon, for the Fed to change their mind and start cutting rates more, would be to see continued weakness in the job market and our economy overall. About a week after that, we get both a PCE and CPI inflation data. Again, that's going to be important. We're going to see probably some of these effects of this war on energy costs and things like that. And then the Fed, next time they meet is April 29th. Is when they'll make their next decision. Right now, the markets do not see them cutting anytime soon, which again, very disappointing, but also understandable given all that's going on in the world. So we just got to hope that things settle down and that some sort of resolution comes to the war, and that way we can see rates start to come down and get some more business out there. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great week, everybody. Thanks a lot.